Uday Kotak expects the central bank to ease rates by the start of next year. Speaking to me at the sidelines at the same event, Kotak also had a word of caution. He believes the markets are not factoring in the geopolitical risks. He also spoke about his game plan for MCX. Listen in.
My view is the politics of a number of state elections and other things have also to be recognized in India. And therefore, I am more of the view that economic growth will be upwards but slower, but surer. And
but do you really believe that big bang reforms will happen only post the state elections?
I would like to believe so. And I think post November, December, we should see quicker action leading on to the budget, which is February.
Okay. In terms of what we're seeing in the markets, and today we've actually seen the Lok Sabha clear the SEBI bill giving more powers to the market regulator. Our last conversation, you said how you anticipate this revival and recovery to be led by the capital markets. But even from that point of view, the policy action that's been taken by the government so far, disappointing?
Don't expect too much. Expect a steady progress, and frankly, my view is the cyclical recovery is on the way. I see a cyclical recovery in the economy starting sometime end September, early October, and markets will lead the way. And
markets are still leading the way.
They are, and they will continue to. I think the Achhe Din for markets are ahead of the Achhe Din for the economy, which will follow.
But do you believe that the uptrend is likely to continue, or do you see that there will be fluctuations because of the global volatility and the global risk?
I think, Shireen, the thing which is not being covered a lot is global geopolitics. And that's an area of concern. Therefore, whether it is Syria, Iraq, Libya, Gaza, Ukraine, I don't think that is being covered by global markets. Therefore, global markets are more complacent than they should be on geopolitics. That will have some impact on flows into India depending on how it goes. But the macro India story, if you and I talked a few weeks ago, you would have asked me questions on the monsoons and oil. Both of them are looking better.
Monsoons and oil are looking better, and we just had the credit policy. Mr. Parikh just a short while ago said that he believes that we could perhaps see a rate cut by the end of the year, a fag end of the year. What's your own assessment of the possibility of a rate cut?
First quarter calendar 2015.
First quarter calendar 2015.
That's what I would feel, subject to all the caveats between now and then.
But do you see more action as far as the SLR is concerned? That is what Mr. Parikh's view was, that even if repo is left unchanged, there will be perhaps more tweaking of the SLR.
Watch the SLR changes, along with the liquidity coverage ratio for banks, which the RBI is imposing from January 1. So if you look at global reserves, they're much lower on banks, but they maintain high government securities portfolio because of liquidity coverage. Therefore, the RBI has a pretty tight liquidity coverage ratio, which it is planning to impose on banks from January 1. Therefore, reduction of SLR does not necessarily mean significantly lower SLR holding by banks.
So you're expecting a rate cut only in Q1 of the next year, financial year. Let me ask you in terms of GDP growth, because you said Achhe Din dheere dheere aayenge. What will that translate to as far as the GDP number is concerned?
I see this year at around 5.4, 5.5 as a GDP growth, and my 5-year average continues to be 6.5% plus. 6.5%
plus. Financial inclusion is likely to be the big theme, and the government is expected to announce a financial inclusion mission on the 15th of August. In that context, what is it that you would like them to say?
First of all, Shireen, if you just think about it on a plain piece of paper, the single biggest opportunity on planet Earth is a country called India, where 800 million people out of a 1.2 billion population do not have a bank account. Where else do you get this opportunity? And that is right here at our doorsteps. We as banks need to use technology and go out there and get accounts. I think the future is technology solutions to get banking accounts.
Let me ask you about the divestment program, and the finance minister in a conversation with us just day before yesterday said that the divestment process is going to kickstart very, very shortly. Do you believe that there is enough appetite given where the markets are? Do you believe that foreign investors are going to be watching the government paper very closely?
I think there is enough appetite, and I also respect the finance minister for the comment he made that he would like to see greater retail participation, and I hope the government focuses, in addition to institutional investors, both global and domestic, to make sure more and more Indian savers come into financial savings by participating in government disinvestment.
But do you think it'll be a good idea to do mega issues like ONGC and Coal India together, divestment of ONGC
do it
and
one
Coal
after
India
the other.
together?
So do them as with a gap of about a month each, and I think the markets will take them.
What are foreign investors telling you about the India story? What do they like and what do they not like today?
I think foreign investors are confident about the India story and feel more comfortable over the next 5 years. Yes, some of them expect pace of change and reform faster than what the Indian political economy will give, and therefore you will see that having impact on volatility on markets. But foreign investors, frankly, at this stage, are much more concerned about many other places in the world, and on a relative basis, India looks better.
But has there been a reality check, especially given what we've seen happen with the insurance bill? Is there a reality check? Have expectations now been tempered in terms of what can actually be done by this government, both in terms of executive action and legislative action?
Which is why I say, achhe din dheere dheere.
My final question to you, Uday Kotak, on the transaction with FT as far as MCX is concerned, how soon do you envisage regulatory approvals and the strategic rationale, given the controversy surrounding it, for you to want to do this?
We have taken a 15% financial stake. We are not allowed to buy more than 15% as per regulation. So we think it's a financial stake at this stage. And
at this stage, which means that it could turn into something more
You never
strategic.
say never to anything. So
more strategic later.
That depends on how the events pan out, how the situation pans out. But we do believe the financial infrastructure space in India has tremendous potential. And we see both the government and the regulator wanting to make sure MCX as an asset is protected long term and is a part of core Indian financial infrastructure.
So when could that financial investment turn into a strategic investment for you?
Really, at this stage it is early. Right now we've just taken a financial call. As you know, we are putting in 459 crores into that, and we hope to close that as soon as we can, subject to all the approvals. And we really think the Indian financial infrastructure space is in for a growth over a long period of time. Of course, it is subject to transaction taxes, subject to a whole host of macro factors, particularly for the commodity markets. But all in all, we are confident that this is a marathon, long-term play in the financial infrastructure space. And we are not trading investors. We want to hold the stake for the long term.